Okay, perfect. So we are live on Facebook and YouTube. So, ladies and gents, thank you for joining us if you are watching this live on Facebook or on YouTube. My name is Akil Mayer from our mortgage broker. We are your specialist mortgage brokers and insurance brokers, I should say, here in Berkshire, advising clients throughout the UK, in particular London and the home counties. Today I'm joined by Mitesh Manek, who is one of our specialist mortgage brokers here at OMB. Mitesh, thanks for joining me today.
Thanks, Akil, for making the time.
Good. So yes, time is very short for everyone. I still think we are very busy, albeit the lack of stock on the housing market. But how's March been for you?
It's been extremely busy. I've had a variety of different inquiries, mainly portfolio clients who are looking to invest in quirky type of transactions. So transactions where there's a short lease that then buy it at a low cost and add value, in terms of increasing the size of the number of bedrooms and then doing a refinance on the back of let's say a breach purchase. Then I have other transactions where clients are moving home, they want to keep the existing home. Then I have first-time buyers. So yeah, variety of different inquiries coming through.
Good. And with just touching on the short leases,
Yeah,
is it still possible to get a mortgage on a short lease, in particular, 50 years, 60 years, 70 years remaining?
that's a good question actually. There are still lenders out there they will provide you finance on it. Having said that, a lot of lenders will tell you that it depends on the values comments. So the danger you have slightly there sometimes is that the lender could turn and say that it's probably not worth as much as what you think you're paying. One of those transactions where it is a bit of a risk. Having said that, some of the clients are sort of buying it at a low cost, but then they're taking bridge finance and they have plans for that property. So what they'll do is they'll probably refurb it. They'll probably then extend the lease post completion, and then they'll come to us and do a remortgage maybe after 6 months because the price of the property would have then gone up, which means that they extract more cash out of that property. So that's what I'm saying.
Perfect. So, in short, yes, we can provide them with a
Yeah,
mortgage potentially on short leases,
yeah,
subject to knowing the exact amount remaining. Just from a value perspective, obviously, the shorter the lease, the less the valuation will come in, just simply because there's more risk
that's
to the
right.
lender because the lease is shortening.
Yeah,
With regards to bridging lenders, are they
yeah.
are they are they are they comfortable in a short lease space and lending in that capacity?
They're okay. I guess the question will be in terms of what the plan is for that
Yes.
client
Yeah.
post completion. So, as you know very well, that the bridge lender is really interested in how are you going to repay that debt.
Hmm.
So they will ask you questions around what is the client planning to do post completion. So
Yeah.
is it that they need some time to refurb the property, getting new tenants in, or they're converting to an HMO, for example? So all these areas are crucial. But generally speaking, let's say that you have a transaction where you need to complete quickly on it because you've got pressure from the agent or the seller, and then you need time to do the lease extension. So the client will then purchase on the bridge, and then have enough time to then extend the lease, and then come back to you after the refurb as well, added the value on top of what the obviously bought the property at, and they'll say to you, look, it's been now nearly 5 6 months. Can we look at then remortgaging on a higher value?
Perfect. And and I get this a lot. A lot of our clients ask me, can we get a commercial yield valuation? Can we get a HMO valuation? What's the top tips that you'd give those clients that are looking to get those sort of valuations?
So the lender will probably do those valuations anyway. So what I'd say to you is that based on the type of inquiry you've got, we'll obviously approach the lender and look at their experience and in terms of in that sector, and they'll
Yeah.
guide us to say, this is what we'll do. You'll probably get two valuations done anyway, and then on that basis, obviously the client obviously may end up getting a higher loan size because of the fact that it's an HMO, so obviously it'll be valued in a different way compared to a standard property. So we'll be guided by the lenders. Every lender is a bit different, but generally speaking, you'll get the valuation based on the fact that if it's an HMO, obviously you'd expect a higher value. So I wouldn't be too concerned. I can see where you're coming from because I get clients that get very nervous when they're buying an HMO, or if they're trying to convert a standard property to HMO. Or sometimes what tends to happen is that it's not an official HMO, but because you've got unrelated tenants, the lender will then classify that transaction as an HMO, which will probably then end up working in your favor.
Perfect. And the other things I like to tell my clients is, if you are, it's got to look and smell and look
Yeah,
and feel and smell like a HMO. So,
yeah,
locks on doors. Has
yeah,
each single self-contained unit? Does it have a kitchenette? Does it have the amenities required as a HMO?
yeah.
How big is the kitchen? If it's a
Yes.
six-bed HMO, how big is the kitchen? Has it got two refrigerators, two cookers, for example?
Mhm.
Does it have a communal lounge space? So these are the hints and tips that you tell your clients, and we all do at the OMB. We tell our clients it's got to look and feel like a HMO. So key things are: is it in an Article 4 area? Does it need planning?
That's right.
If you can obtain planning, that's great. That'll give you a good chance of securing the commercial valuation or a yield valuation or HMO valuation. There's lots of different ways and means of people calling it that nowadays. But you've got to make sure that, as I said, it's got to look and feel like a HMO. You've got to spend a substantial amount of money on the refurb to
Mhm.
show that it can't be turned back into a family home overnight. Yeah.
Having said that, I think the other thing that clients don't tend to realize is that depending on the area you're buying, it's worth then checking with the local council. Because if you
Mhm.
need an HMO license, you need to obviously apply for that as well.
Love that, love that. And again, there are councils that are planning to move into an Article 4 direction. And usually what happens, you get a 12 months heads up. So, for those savvy investors that are looking to enter the HMO space or buy further more HMOs, look for look for towns that are going into the Article 4 direction in the
Yeah.
next 12 months. So, and
Mhm.
that's widely available, I believe. You can ring up all the local councils or the
That's
areas
right.
that you're looking to invest, and ask them, what's the situation with HMOs.
Yeah.
So
And
we've talked. Gone. Sorry.
just sorry, just to add on that, I mean, don't be concerned about buying quirky properties because we have those quirky lenders that are happy to buy HMO properties with an annex, for example, or it could be a multi-unit free or block where some properties are like studios. We've got lenders that'll take a view on these things.
Perfecto. So we talked about valuers. Let's talk about solicitors.
Uh, yeah.
So solicitors are they are at the end of the chain in terms of the client's found the property, he's put the offer in, it's been accepted, he's come to OMB, we've done the application. Now it's the conveyancers' time to do what they do best. How are you finding solicitors, and in particular, how should you choose what solicitor to use in particular, whether it's a bridging loan transaction or a limited company transaction?
Mm.
So the key things I want to hear, or our viewers want to know, is what type of solicitor should I approach for various transactions? How do I define good, bad, and ugly? So have you got any examples or experiences of that?
So what I would say to you is that try and understand the experience the solicitors firm have in dealing with these transactions.
Hmm.
And to be honest, if you approach a broker like ourselves, we'll have a very good idea whether those type of solicitors are experienced in that market space.
Hmm.
So sometimes a very good way of looking at it is most lenders would normally ask for three partners within a firm. The terminology they use is SRAs, or three managing partners in the firm, registered partners. And also terminology that they use is CQS, registered. And all these areas, I think, will give an indication whether that particular firm is experienced in that sector. And if they are, what sometimes tends to happen is that if you give me a name of solicitor, I'll check with the lender. If the lender says, yeah, we've used them before, or they're on the panel, that's always a very good sign, because that means that that solicitor has dealt with that lender and they understand the complexity of the transaction. So what I would say to you is always approach a broker first before you start putting the offer in, all that, because it can be quite a costly transaction, but at the same time also a painful transaction because there'll be lots of delays if you choose the wrong type of solicitor. When I
Hmm.
say the wrong type of solicitor, I mean an inexperienced solicitor, and the transaction could really drag on for months and months. And I've had those scenarios last year, and I would urge the listeners and the viewers to say, look, just double check with the broker before you plunge into this type of deals because it can really become a nightmare.
No, I love that. Thank you. The key takeaways from that is, and what I want to add furthermore is, a lot of mortgage products, in particular owner-occupied residential stuff, a lot of deals that we provide our clients and mortgages have incentives. They have what they call free standard legals. Now,
Yes.
it's great on the face of it, and it is great in most instances where there's free legal advice. There's no charge to the client. The same legal firm will represent the lender as well as the borrower in the same capacity, which is great. It's great. It saves the client money. It's all done under one roof. However, you've just got to be conscious they're providing you a free legal service, and just be conscious of the amount of files that they've got on their desk. So if the transaction, I always say, if it's a remortgage or capital raising in order to purchase the further property and time is of the essence, maybe the free legal service might not be the right firm for you because they may have a huge backlog. They might have many cases on their desk that are priority before yours because it's done on a first come first basis, I assume. So free legals, just be conscious. There's anything that is free sometimes comes at a price. But again, as Mitesh, as you quite rightly said, make sure you have make sure you instruct an experienced
Yeah.
conveyancing firm depending on your transaction. So you touched on bridging loans, bridging conveyancing, and traditional mortgage conveyancing is two different things. So yeah, you're quite right. Please do get in touch with us if you need a bit more direction in recommendations. We've seen quite a few of the good, some of the bad, and some of the
Yeah.
ugly, and everyone does try the utmost. But again, we like to work with people that go the extra mile. Would you
Mm.
agree?
Very true. Very true. So we try and build up those relationships with the sisters. I actually have a meeting next week with the sister. And
Hmm.
it's very important that we have that because ultimately, you've put in all this hard work, but you want that case to complete.
Yes.
So it's good for us, but at the same time, it's good for the client because obviously he wants to make sure that there's a smooth transition. Although our job will stop at the point when the offer is issued, if the
Hmm.
right type of solicitor is not there, it's going to leave a bad taste at the end of the day because you can't then complete, or there's stress along the way because there's problems with the solicitors, and you'll get involved at some point because you'll find out. The client will come to you and say, look, we're having problems, can you help us, can you do something about it? So it can get really frustrating at times.
Perfect. Thank you. So in short, if you're unsure about a solicitor firm that you're looking to use, get in touch with us. We'll let you know whether we've got a contact there at the law firm, which we usually do have a couple of contacts in the major firms, and that just helps that we've got a key person that we can contact. We can bug them on a Monday and sometimes on a Sunday as well. So yeah, you don't ask, you don't get. That's what I always say.
Yeah, it's true.
Um, there's a lot of what we're finding at the moment. There's a lot of inquiries about let to buys, and obviously buy to lets as well. So, just for our viewers, our listeners, what's a let to buy first?
So it's basically what it says on the tin. You're trying to let your property in order to buy another property to live in. So
Uh-huh.
that's what a let to buy really is in a nutshell. But I wanted to expand on this because I think there are so many other layers of complexity in this transaction that you need to be aware of in terms of different scenarios. So one scenario could be that you're letting a property to buy a residential property,
Hmm.
but you need a let to buy mortgage done on the property you're moving out of, and you also need a simultaneous residential mortgage as well. So that's one scenario. There could be another scenario where you've got enough cash to buy the onward residential purchase, you need a residential mortgage, but then you don't need to release any cash from the property you're living in right now. So all that requires is for that to be converted to a let to buy. Having said that, you sometimes don't really need to convert a property to a let to buy if your existing lender who's provided you a good deal on residential terms for is happy for you to be granted what I would call a consent to let letter. If you get that letter, basically what you're saying is you're going to existing lender and saying, is it okay for me to let this property out? Can I have permission? And that's what a consent to let is. So if you can get that, so sometimes you don't really need to do anything. And then when your existing deal comes up for renewal, you can then change that to then a normal buy to let, because by that point you'd have moved out, you'd have had rental income coming in, tenants moved in, your existing bill comes off expiry, and then you can then change that to an official buy-to-let mortgage. I know it sounds a bit complicated, but there are different transactions involved in this whole concept of let to buy.
No, I love that. Thank you. And so, we always say leave the finance headache to us. That's our problem. We tell our clients, go and find your next investment or go and find your next family home. Leave the finance headache to us. We'll ask questions, provide us the information, and we'll do our utmost to provide you with the best mortgages. But again, as you quite rightly said, Mite, there's not the let to buy is not just one straightforward route. You quite rightly said the consent to let is quite a nice little niche to have as
Yeah,
long as your existing lender agrees to it, and then you can convert that to a buy to let down the road. And the
exactly.
beauty about the let to buys we finding at the moment is there's obviously been a huge increase in house values as well, which
Mm,
then helps with the increased equity that you've got within your property because you can't simply convert your residential mortgage if it's at 95% loan to value to a let to buy or a buy to let because simply there's not enough equity. So again,
exactly.
work with us, let us know what the numbers look like, let us use our fancy systems in the background that we've got to value your properties. We work very, very closely with a number of estate agents in the local areas,
Mm.
predominantly in the home county. So, get in touch with us and we can hopefully shed a bit more light, I should say, on your home valuation. Then, talking about home valuations, I'm finding a lot of clients are actually undervaluing their properties. Which is normally everyone thinks their property's worth a lot higher than what it is, but a lot of our clients are actually coming in quite undervalued. So what I would say is just constantly take into account what the values are going forward. Hopefully you've got a detailed property schedule. You're updating that on a half yearly basis, just to ensure that the values and the equities and the loans that you have in place are the right amount. So when it comes to refinance or sharing the schedules with us, we've got the up to date information in order for you to get the best loan to value rate. So thank you for that. Other questions that come up around, income multiples. So we're talking about home movers, first-time buyers. There's lots of conversation in the market that I can only get 4 times income. I can get 5 times. I can get 8 times. What's the rule of thumb? Is there a rule of thumb? What should people be aware of, and what can they do about this?
So I think what I would say to you is that don't get too hung up on headline information that you get from lenders that you read on, by doing a Google search, or maybe your friend's seen an ad somewhere that says you can get 6 times, 7 times. What I would say to you is each case is very different. So don't have a preassumption that I can only get 4.5 times or 4.75 times my income. Approach us because in reality, even if you got a background buy to let property, if it's self financing, then in reality you could get even more than 5 times your income. I've got lenders that will, agree within 24 hours or 6 times lending for me. It's not impossible. It can be done. It doesn't even. You could be a professional landlord and just getting rental income, and I can get you 6 times income. But what I would say to you is that each case is different. So the lender will assess each case on its merit. So it'd be things like you've got debts in the background, student loans, if you've got a family with 3 children, childcare costs, school fees, all those factors to take into consideration. Having said all that, also, where are you buying? Inside London, inside the M25, outside the M25, up north? All these factors will kick in. Having said all that, we have lenders out there that can do around 7 times lending. So it's a hard one to just try and say you can get 5 times lending or 4 times lending. Each case is very different, so you have to assess it. When it comes in.
Perfect. So, for those of you that are listening to this and or playing it back on Facebook or YouTube now, you know, as Mitesh quite rightly said, there is no one fit all rule. That the key is, you're using an independent brokerage like ourselves, and we are then going to go out to the market and find the most suitable lender based on your affordability, your criteria, your income types, whether it's just pension income or is it buy to let profit income, or is it employed income, or is it self-employed income? So there's lots and lots of little caveats and detail that we need to further look into before we can provide you a quote. But the beauty here is, you might think you can get 4 times, but we can get you 6 times because you tick all the boxes. Or you might think you can get 6 times, but we can only get you 4.5 times. So
That's right.
so it can work both ways, advantage and disadvantage. But I always say the only way you're really going to know is getting in touch with the likes of Mitesh and understanding the true affordability, because the market is always changing, right? The criteria is changing
That's right.
weekly, daily.
Yeah, very true. Very true.
Good. So the other questions that we always get, and these the reason why we do these sort of lunchtime calls are because these are real life examples, right? So, but these are real life examples, questions that we always get here at the OMB offices here in Berkshire. So another one I wanted to share with you is, can I get a buy-to-let mortgage on a block of flats on a freehold title in particular? What's the chance? What's splitting the titles on the back end? What's all this about? Tell me more.
Okay. So what I'd say to you is that if you're a homeowner and
Yeah.
you're looking at even your first buy-to-let purchase and it's a block of flats on a freehold title, we can definitely help. It'll be a traditional buy-to-let mortgage with traditional specialist lenders. So if you're picking up deals on, let's say it's a limited company purchase, you're picking up deals that's a 3.25, 3.5%, we can get those deals. It's not a problem. When it comes to then looking at splitting titles, you have to be careful about the type of transactions you're looking at.
Hmm.
It could mean that we maybe then end up doing a bridge finance initially, because we may have to do that. What would happen then is the solicitor that gets involved before completion will look at splitting the titles, and then each flat will have its own value. And then what we can do is we'll have this short-term finance in between to try and purchase the block of flats and then convert them into leasehold flats. You could then end up having a separate company that's managing the freehold in let's say in a different name, and then we could look at individual flats and its value, and then remortgage and repay the bridge based on the value of each flats. And then it could mean that it's one lender that's lending on the block of flats, so it could be multiple lenders. But then it could mean that you then end up having traditional buy-to-let finance at the back of doing the bridge finance based on the purchase of the block of flats with a split of titles on completion.
Perfect. So with regards to blocks of flats, so there's things called multi-unit freehold block, which means multiple units on one freehold title. So as you quite rightly said, there are various lenders out there that will lend on that basis, traditionally up to 6 units on one freehold title. Once you start tripping over the six and going to sevens and plus, then you're sort of heading into the commercial territory, right? So the rates sort of they don't spike dramatically, but there is
Yeah.
a bit of a change in rates, right? So um, with regards to lenders, are we comfortable with working with all types of lenders in the market?
Yeah, we are. I wouldn't be concerned about this at all, to be honest. As I say, we've got so much choice, which is spoiled for choice. So, as I say, anything quirky like this, just get in touch and then we'll guide you. Sometimes what could happen is that we could end up having a lender that actually provides you that short-term finance, and
Hmm.
then the same lender could could provide you the exit as well as a vital mortgage. So that's
Amazing.
possible. That's possible as well.
And that's right. You know, I always say have the end in mind at all times. And we like to always ask our clients, what's the end goal? What's the strategy? What's the plans going forward? And let's work together
Yeah.
constructively because we don't want to just do we're not order takers here in a nice
Yes.
way. I mean that. And the key
Yeah.
is that the reason why we're not order takers because we're relationship driven, and we want to do the right thing by our client and to ensure that they're meeting those goals, they're prospering, they're scaling their property portfolios and the alike. So freehold titles, multi units. It's a great strategy. It's a great way of applying further yield rather than having 6 different properties in 6 different
Yeah.
towns or areas. You've got 6 units under one roof. It gives you a lot of security that way. And as Mitesh quite rightly said, you can get one mortgage, one loan over all the units, or you can have separate units with separate lenders as well. So there's many different ways. It's just
Mm.
understanding whether you're looking to buy, sell a few off, then you might need to consider separating them and creating leasehold titles.
Sorry. Okay. Just one other thing. Again, with this type of transaction, you need that specialist solicitor to get involved as well.
Yes, I totally agree. I totally agree. Another one that always comes up is, can I get a mortgage to buy land with or without planning?
Very good question. So we've had a few inquiries like this. Clients sitting on land with or without planning. So it
Mhm.
can be done. Sometimes we have these specialist lenders that will provide you a shorter bridge finance. It could be, let's say, if it's land without planning, you could probably, if you've got 50% deposit, they'll be happy to sort of lend you on a base of 50% loan to value, and then convert that bridge finance onto a development finance or another type of loan, depending on what you're planning to do with that piece of land. and could be that you then end up being with the same lender that has all these multiple different types of products that they can offer, which would be an advantage to you because they know you at the point when you apply with them about your profile, your background credit, and your experience. And on that basis, yeah, you could then end up having different types of products with the same lender, convert from a bridge to other type of products, and then depending on the end product, whether that's a block of flats or whatever, then we would look to exit obviously the loan uh, to a normal traditional buy-to-let finance.
Perfect. Now, the key thing here is understanding the value of the land itself. Now, a lot of lenders, without a dwelling on the site, there's no real
Yeah,
value to that site because there is no dwelling, there's no income to be generated immediately. However, as you right as you quite rightly said, Mitesh, if you're fortunate, you've got your main residence with an acreage around you, for example, you might want to consider separating the title. That has its own separate legal title. Then you own an unencumbered site,
yeah,
which is very favorable to the lender because you've already got skin in the game, what the lenders like to see. And then it's a case of understanding what the proposal is, what planning you're looking to apply for. So people that you need to initially engage with would be a planning consultant to understand the legalities, the law, what can be done, and then the architect. The architect is the art guy. He's the guy that's going to, or the lady, I should say, as well. Are they going to be the people that are able then to bring your plans into reality and put it on paper? So it's understanding what you can get from granted from the council with regards to what you can build. And then the next stage would be understanding the costs related to the build itself. So that's where you'll engage with a JCT contractor, the planning consultant, the architects. There's a lot of professional fees that are involved in that space, and that's when you'll then contact the likes of us with your proposal, with the scheme, with a draft scheme, with your draft schedule of costs. Then we can go out to lenders to get a feel for what they're considering here, what the loan to values look like, what the loan to GDVs look like. So, as I said, as Mitesh quite rightly said as well, if you're sitting on land, you're looking to divvy it up, separate the legal titles to build for an investment or maybe a second home for the children. Do get in touch. There's ways of doing so in regards to generating the finance in order for you to build out the property. If, for example, you found a site with planning permission and there is a dwelling on there, you might want to take up refurbishment finance. What's your take on refurbishment finance in that position, Mitesh?
no, it can be done. Obviously, it's depending whether it's light or heavy.
Yes.
We've got actually lenders out there that'll be happy to look at a normal term finance, buy to a normal term finance on light refurbishments. If it's heavy, you may end up doing a bridge finance because it's heavy refurbishment. But having said that,
Mhm.
again, it's one of those things. What's your end goal? Are you looking to then add value and then come back after 6 months and say, look, I need to raise more cash on this? Then maybe bridging will be the best option, even though you may get a term product because of the fact that you're trying to release cash quite quickly. Happy not to release cash, the term product is available. Why go for a bridge? It's too expensive. So you have to then really decide what your end goal is.
Perfect. And I forgot to mention at the beginning of the call, if anybody has any questions, drop them in the comments box, and we'll do our best to quickly answer them for you. I know it's lunchtime. You guys are probably eating your BLT sandwich or your KFCs or maybe a healthy salad. So we won't keep you any further too much longer. Let me just see if there's any questions. Yeah, one question just popped up from Lux 335. Can you ask? My sister has a buy to let and wants to gift it to me at no cost to me. Although I have no employment and a CCJ satisfied, but comes off my file in August, can this be done?
Wow, so good scenario. Um, Potentially, we'd have to look whether the client owns their own property. We may have to go to a specialist lender depending on the loan to value as well. There might be some restrictions. If the client doesn't have any properties in the background and there's no income coming in at all, then potentially could be an issue. But if they turn and say, well, we've got lots of savings in the background, that could help because that covers your wait period. So we'd have to look at it. Potentially, if there's no option out there, there could be an option for bridge finance. So I would say we'd have to look at this in more detail.
Yeah. So do get in touch. The only thing that does scream out to me there is the first line. My sister has a buy to let and wants to gift it to me. If you're fortunate to have your sister and there's no mortgage on it, it's debt free, and she wants to gift it to you in full, then she can simply do that by speaking to a legal lawyer to talk you through the conveyancing process, the legality. So if there is no mortgage, I would speak to a conveyancer on that deal, on the transfer, I should say, of the property as a gift. If there is a mortgage involved, or she has a mortgage that needs to be repaid, or you're going to purchase it off her, depending on how much equity she's gifting. Again, have that conversation with us, get in touch. But every lender will certainly need an income in the background. With regards to CCJs, to be honest with you, depending on how large the CCJ is, it's coming off in August. How long has it been around for? These are the questions that we'll ask. But quite simply, is get in touch, share with us your credit report from checkmyfile.com, and then we can then look at it from a more holistic position and provide you with a plan going forward.
I think, Akil, on this one, I would say do the planning and then make the application afterwards because you will attract better deals.
Perfect. Thank you. And hopefully that's answered your question, Lux. Feel free to get in touch with Mitesh directly for further advice. Mitesh, 30 minutes, 57 seconds in. Anything you want to leave us with?
I would say don't be scared into going into these new adventures of buying quirky properties because lenders have the appetite.
Mm-hmm.
All you need is the right guidance. So get in touch, and we're more than happy to provide a free initial consultation. So I think that's a message because as you can see the type of inquiries we're getting. Some of these are clients that are first-time landlords. Buying all these quirky properties because they know that the return on this the investment is great. So I would say don't get scared. We'll give you the right advice. We'll give you the options, and then we've got the right connections, the right type of accountants, solicitors, and then it's up to you to make a decision.
I love that. And two things I'd probably want to add. The first one would be, don't just believe what your friend at the pub is telling you, or down the rest, or down your local. Speak to professionals. Take the relevant advice from professionals that are in that space, because everyone's circumstances are very individual and very different from one another. So speak to professionals like us if you're looking and intending to apply for a mortgage. We're open, we're honest. We don't just work with the high street lenders. We work with a huge amount of lenders in the UK. So we're going to provide you with as I keep saying that same word, the holistic approach, where it's not just about what the fees look like or what the rate looks like. It's more important that it's the actual criteria, the background information that's key for us. So the point I'm trying to make there is quite simply is speak to a professional, take up the relevant advice. And the other thing is, the big one is there's lots of talk about interest rates being increased during 2022. There's lots of inflationary pressures. My honest opinion is rates are certainly going to be going up. I think we're going to be heading to 1.25%, 1.5% by in the next 12 months. Mukesh, what's your take? Up, down, sideways?
I think they probably will go up. I don't know how
Come
soon.
on, put a number on it. Put a number on it. Come on.
I never do, so I'll stick to that. But what I'll say is that they probably will go up. Having said that, look at your individual circumstances. Don't lock in on a product for 5 years. If you're thinking of suddenly moving in a year's time, don't take the risk, because obviously if you wanted to then go to a different lender for your next transaction, you may end up paying a big penalty. So I would say don't be too overly concerned about all these things. Each case on its merit. So depending on what the long-term plan is. If it's a long-term plan where we're not going to move at all, we're buying this, we're going to stay there for 5-10 years. Yeah, by all means, locking it for 5 years as a 5-year fixed rate product. Now, if you want to do that and have the stability, as I said to you, our job is to give you the options depending on your circumstances, depending on how good the fact-finding process is. So obviously, it depends on each broker how good they are at asking those right questions, and then it's up to you then to understand long-term what the consequences are, or based on what decisions you take.
Perfect. And then the other thing I wasn't wanting to add there was, we're conscious of rates being increased. For those of you that have got mortgages coming up for renewal in 2022, now's a great time to start reviewing your portfolios, understanding when the mortgages are coming up. The best time to contact us is sooner rather than later. So as I said, anything expiring in 2022, now's the perfect time to contact us. And that's not just for your home mortgage, your home personal mortgage, I should say. It could be your buy-to-lets as well in the background. So do get in touch with Mitesh to discuss them further, or myself as well, which is not a problem whatsoever. with also, I wanted to mention with regards to your home mortgages. Now, even if you wanted to move home, the mortgages can usually move with you, so they call it
Mm.
porting. So Mitesh was alluding to the buy-to-let side. Repaying a buy-to-let mortgage within a 5-year period, you are probably going to be penalised because there's not many buy-to-let mortgages that you can port whatsoever. However, on the residential side, your main residence, you usually can port that mortgage over if you, as long as you're keeping the size of the mortgage in line with a new purchase, if not more, that can certainly be moved over with 99% of the lenders. So porting them over is not a problem. You may want to start considering longer term fixes, just simply because there is usually a cost to keep refinancing every 2 years. You've got legal fees, you've got survey fees, you've got lender application fees, and everything else in between. So just be conscious of the fees of refinancing, the rates of interest going up in the very short space of time. Look at refinancing any mortgages that are coming up in 2022. And I think I'm going to give it a break and I'm going to tuck into a bacon, lettuce, tomato sandwich. I think we'll leave it as that. But if anybody does have any questions, reach out to Mitesh. His number is on the screen. I will pop it into the questions box below as well with all our contact details. Mitesh, thank you so much again for your time this Friday. I will love you and leave you.
Thank you. I'm really glad that we're managing to make time for these sessions because it's valuable information out there.
Thank you. And as I said, if anybody's got any questions, drop them in the box and we'll do our best to contact you directly. And we wish you a lovely Friday and an enjoyable weekend. Thanks for joining us. Speak soon. All the best.